Welcome to Ring the Bell Investing with the Masters of Marketocracy.
Tonight we have a special guest, former Marketocracy master in his own right, Jim Vanmeerten. And I'm going to tell you a little bit about Jim. Jim earned a BS in Accounting and Business Administration from Berry College, a JD from the Woodrow Wilson School of Law, and attended post-bachelorette and graduate courses in business admin, quantitative math, and education at Florida Atlantic University, Georgia State University, and the University of North Carolina at Charlotte. I thought I was doing pretty good with 3 degrees, but Jim, I think, has me beat. Previously, he's been an accountant, an attorney, an adjunct professor in business law, accounting, and internal auditing, a financial advisor, supervisory principal, and compliance officer. He also passed the Georgia CPA exam, certified internal auditor exam, and the FINRA Series 7, 24, and 9 and 10 exams. He's presently an analyst at Bar Chart and writes Chart of the Day, an article sent out daily that utilizes the tools available at Bar Chart, including screeners, bar chart technical indicators, and trading signals to find stocks with compelling setups. Jim won one of the first contests at Marketocracy back in around 2009, and he was a spokesperson for Marketocracy for a few years. So welcome, Jim. We're thrilled to have you join us tonight. And we also have, of course, Dan Wyman and Glenn Brownworth, a couple of our regular masters and panelists, and we're looking forward to talking about stocks tonight. So let's jump in. The rate cut that was on and then off and then on again was delivered by the Fed yesterday. The markets responded with a big rally, and with about 3 weeks of trading remaining until the end of the year, will we continue to rally into the end of the year? What do you guys think?
Usually what happens, in my humble opinion, is we do pretty well up until the last about 10 days, and then everybody has to do their sales for the end of the year to cover their taxes. So even if they don't want to sell, that last week to 10 days, people are going to have to cover whatever their taxes or the costs are for the year. So sometimes we'll rally to the point where people have to get out and the market's gone a little bit higher and they got to take their profits so they can pay their taxes. But that's a pattern
that's an interesting thought, Glenn. And I used to think like that, but I have to tell you that I've kind of reset the tax loss selling period to a little bit earlier, because I've been feeling the last few years that people are selling earlier, like the beginning of December, getting it done with and over with, or they wait to the beginning of the year so that it falls into the next year. So it'll be interesting to see. Dan and Jim, any thoughts on that?
Well, I think that the first half of December is when most people take their tax losses. They also, it's getting to be a larger portion of people only take their RMD from their IRAs out once a year. So that happens. The taxes, I really, being a former accountant, most of the people that I knew would sell to pay their taxes, but that'd be the end of March, the beginning of April, because they were postponing it as long as they could, leaving the money in till, because it's not due till April 15th. You can also, there is a possibility that I always look for the Santa Claus rally. And to me, that comes from the 15th to the end of the year, the Santa Claus rally. Those that took their tax losses early may end up even buying back the last week of December, because, after they've done their 30 days. A lot of people wait till January, but those that sold early around Thanksgiving will be getting back in by the end of the year.
Yeah, I agree. I actually start looking at it in November for sure, thinking, is there something that I want to sell right now and maybe buy back before the end of the year? So I definitely agree with that. And I think that was a great point about the RMDs, because I do know some people that wait toward the end of the year and do it once a year. I think we all know somebody like that. Dan, what are your thoughts?
I mean, why wouldn't it continue? We just seem to be on a tear, right? Like the past 3 years have been pretty amazing for the stock market. So why wouldn't it continue? It's gotten expensive, but I guess we're going to keep going. We'll see.
Yeah, I like your
I'm with you.
optimism.
Yeah, I mean, why not?
I am with you, and I am all about a Santa Claus rally taking us to the end of the year as well. So, thanks, gentlemen. But how does this set up
I'm
for
hoping
January?
because back in mid-April, I was on a podcast and the moderator asked what the S&P was going to close at the end of the year, and I stuck my neck out and said 7,200. So we're looking right at about 6,900 now. So I'm hoping that Santa Claus rally will make my prediction come true.
My call for last year was 6,000, and we nailed it about December 8th or December 15th at the end of the year. So, yeah, it's still amazing that there's so much demand. But
Yeah, and we did the same earlier in the year. I think we're a little bit above mine right now. I think I was about 66.50. I think Glenn got a little conservative, but he was a little wishy-washy there.
Yeah.
Dan, do you remember where yours was?
I know. I was thinking like 8 to 10% this year, and we're well past it. I was kind of in your camp, Tony.
Yeah. Thanks for sharing that. So how do you guys think this sets up for January? Because we just talked about some interesting factors here, like tax loss selling. So we've had a good year. Let's say we do get a Santa Claus rally, or just stay where we're at even. It's been a good year. And we know we're going to have a new Fed chair next year. What do you guys think will happen in January?
It'll be slow. I think it'll usually, all this action happens at the beginning of December. So people are kind of planning out their year, the first 2 to 3 weeks, 4 weeks, kind of dipping their toes back in. But I would see it start to take off more probably around February. People are away on vacation, doing their things,
They say as January goes, so does the market. So
True.
January is supposed to be a pretty good indicator of the rest of the year.
Yeah.
And I've seen some Januaries that start off terrible and some Januaries that start off great. So I'm trying to, get a feel for if you guys feel that this year and how it's going to affect January and what we're going to do. Personally, I think about the new Fed chief coming in, and that right now they're only projecting one cut next year, but I definitely see more because of the change in the Fed. In fact, Howard Lutnick, the Commerce Secretary, was on this morning, and he was talking about, boy, we got to take advantage of this great economy and everything we have right now. And certainly the Trump administration is trying to keep it pumped up and keep it going. Dan, thoughts on January?
Yeah, I mean, in general, I think we've been, like I said earlier, I think we've been spoiled the past few years, and I'm going to go into next year tempering my enthusiasm a little bit, not expecting 18 to 25% returns from the stock market going into next year. So I think focus on your time horizon and don't get too far ahead of yourself with big expectations, and try to invest for the long term.
Good points. Yeah. Jim, what do you think?
I always worry about black swan events. Being an accountant and being in finance, I always like to look at mathematical projections, but always, every once in a while, every couple of years, black swan event happens that you don't foresee. I think a good example of it was if you look at any chart of any stock in April of this year, everything was going along beautiful, and all of a sudden, kapowie, and stop losses were hitting, the quants were hitting. Anybody playing with a black box was just a chaos for the month of April, and so I always keep my stop losses in because you cannot predict a black swan event when it's going to happen. It will happen at some time, but you don't see it coming.
That's a great point. Sorry, Glenn, let me just add, that's a great point. And I would say that, especially with the current president, you feel twice as much like you don't know when it's coming, just because it's everything is just so voiced back and forth. I mean, when I look at the war in Russia and Ukraine, one week you feel like he's supporting Ukraine, and the next week you feel like he's supporting Russia, and you just don't know. And that's one of my biggest concerns about black swan events is that war. I feel like we could wake up one day and all of a sudden something's happened between that war that's going to crash the stock market. So I'm with you about black swan events for sure. Glenn, I'm sorry. Go ahead.
Well, it's actually I like to quote Baron von Rothschild when he said centuries ago to buy when the blood is flowing in the streets. And those few days in April, everybody's panicking and running for the exits. That's the time where you have to go counter to your fear and say, wow, there's a lot of opportunities around here. I'm going to start going back in. And it's such a powerful mechanism to stay away from danger in our brains. But that's the time when you have to actually run into the burning building, so to speak. You know.
Absolutely. You can look back, and I'm sure Jim can attest to this. You look back at any charts this year, and you could have picked up just about anything in April and been making great money. So the key is, though, being having some liquidity and having some cash available to do that when that occurs, because we're all long-term investors. And if you have everything tied up, sometimes it's difficult to do. So yesterday, Oracle reported they had a miss on revenue. And interestingly enough, we had great follow through today from the Fed report on the Dow, and the S&P finally turned positive, but Oracle drove the NASDAQ down. You guys have any opinions on Oracle, whether it's a buy, a hold, or a sell right now? It had already been falling before this report, but does it also change your thesis on AI? Certainly a lot of the AI and a lot of NASDAQ stocks were hit today because of it, while the Dow's rallying 500-600 points.
For me, Oracle, at least when I worked in IT in some big companies, it's a company of golden handcuffs. You can have great database technology, but once you get in there into bed with Oracle, you're there for life. But they make powerful technology, and now all these companies that have these giant Oracle databases want to apply large language models to them, so they can actually, it's a form of data mining, and they want to see what they can get out of it. So, Oracle is perfectly positioned for being able to modify or what would you call it, mine people's data using AI. So I think this is just a short-term blip in the radar, because there are open source database systems, but even now with all that technology, people still spend a fortune on the licensing for Oracle. You can't escape it. If you get what you pay for. So this might be a short-term thing in the long run when it comes to AI.
So would you buy it today, Glenn?
Yeah, because if it's pulled back a little bit right now, it's probably an opportunity. All these companies are they're riding the coattails of the bigger companies, but there's a reason for it. Other people are using these tools. They're making a profit, right? It's not just those giant companies pulling the market along. Everybody's being pulled along with them too at the same time, which is a little dangerous, but at the same time, that's the engine of how our economy works, right? Technology works with other technology. You want to build a data center, you need some plastics from the petroleum industry. You need some aluminum, you need some steel, you need air conditioning units, you need all these other pieces to actually make everything work. So, it's okay. Like a rising tide.
Okay. Thank you. Jim, you were starting to say something?
Yeah, Oracle is a good news, bad news story. The bad news is it's been kind of in a tailspin, so it's been going down, down, down. The good news is for long-term investors, it's getting cheaper every day. So, it's actually a better buy now than it was 6 months ago.
Jim, because you write for bar charts, I have to ask this question. Do you put more focus on value and fundamentals, or do you put more focus on the charts and the trends, or is it a mix?
In my articles, there's a 3-part of each article. And so I although the stock selection that I put every day is about the technical flow of a stock, I then say you can't ignore the fundamentals. I mean, if a stock is going up, but you also look and there's no earnings, there's no thought of new revenue in that, then it's, it could hit its top any day now. So you've got to have that momentum of the stock price coupled with increasing revenue, earnings, and cash flow. Those three things I always like to look at to see if I'm going to say whether it's a buy or a sell or a caution.
Very good. Very good. I like that. I tend to mix a little bit of everything, but I'm big on fundamentals as well, for sure. Dan, what are your thoughts on Oracle?
I mean, I haven't really followed Oracle. It's just kind of been one of those kind of up until maybe the AI boom, one of those kind of sleepy big tech giants. I kind of put it in the same bucket as Cisco, although I'm sure it's performed better. But now it looks interesting. Kind of like what Glenn was saying. You have a pretty solid company that is well positioned in the AI space. Maybe everybody's trying to determine who's well positioned, but seems to be pretty well positioned. And now it's kind of been on a downtrend for a couple months now, so it starts to look interesting. Hasn't really been a focus of mine, but it gets my attention. Start paying attention to the price and where it could end up.
Yeah, I'm kind of in your camp too, Dan. I was never really a big Oracle follower. I invested in Cisco versus Oracle because I just felt like there was a ton of value there. And then all of a sudden Oracle's exploding, and so it has to grab your attention, right? And now it's pulled back, so it's like probably worth another look. It's an interesting story for sure. Okay, guys. And second part of that was, does it change any of your, because of what they reported, and a lot of people are concerned about AI in general, does it change any of your thoughts on AI in general? I'm assuming not, because you're all interested in Oracle and think it's a pretty good buy right now. So
it's more like, I think people did the old, buying the rumor, selling the news. So like you said, they've been cranking. People took their profits off the table, but it wasn't giant. It was a couple of percentage points, meaning people were like, okay, they'll take a little, but the whole stock didn't pull back dramatically. It was just, I think it's just profit taking.
Well, it's been falling for a couple of weeks now, and then got another hit on the report. So, yeah. All right. Well, let's move on to talking about 2026 again. What's your favorite sector for 2026 and why? I mean, are you continuing with what you've been? Do you think there's going to be a change? I've got some thoughts on it too, but Glenn, you want to start on that?
Well, I do focus on the technology sector, but I just think that it's the general economy. We do have high inflation. There are other issues with structural problems and things with legislation and the government, but it's kind of amazing. You have to have faith in that underlying structure where things are, people want to make a buck and they want the economy to work regardless of what the government wants. So maybe that works better, and all the little us ants are working together. We're the ones who make the colony work, not the queen. It's something like that. So, I think it's I don't know. I just think the economy's not great, but the stock market just shows that people are making money and things are moving around, and it's hard for people to see that. It's a little opaque sometimes.
So bottom line, though, you're sticking with technology in 2026.
Yeah. That's
okay.
The one.
Five of the seven Mag 7 are underperformers this year, right?
But there's
okay.
It's the guys who ride their coattails that are the ones that are really taking off, actually.
Yeah. Okay. Okay. Jim or Dan?
Well, I like two industries. One is the heavy truck and equipment. People like Cummins, John Deere, Federal Signal. So we are going to be building a lot of equipment, and a lot of this equipment is going to be AI run. And then, of course, the second is the semiconductor equipment. One of the stocks I've been looking at for a long time, ASML out of the Netherlands, because they play the entire world. They're playing China and everybody else, and also advanced energy, Teradyne, other companies like that. So we're going to be building a lot of massive data centers And so I'm looking at all the equipment people that are going to be providing, the structure, the building of those data centers, the making the data centers themselves efficient. But my big question mark is with AI is there are going to be some great winners, but there are also going to be a hell of a lot of losers. There's going to be people that either overpromise and can't produce, or they get shut out by the really successful companies. And my biggest caveat with AI is AI uses all the information it can, but it doesn't fact check. So when I look at, I'm a channel flipper. So, when I watch CNN report on something, and then I turn to Fox and they're reporting on something, and I'm then to go to MSNBC and they're reporting, I'm looking at it and saying, wait a minute, all three of these channels are talking about the same. At the same time, AI is going in and taking the opinions that are expressed on all three of those channels in order for it to come up with its predictions. So that's a big thing I have about AI is it's wonderful that it's taken all this information and boiling it down, but how the heck is it going to fact check itself to know which data is real and which data is someone's opinion that doesn't know what they're talking about?
Well, that's a great way to put it, Jim, because that's a problem I have with AI too, is you get a lot of generic answers back, or how do you know that, and I've got answers back that I'm like, this isn't the right answer. And that's a great way to put it, is they're not fact checking. My question about some of your things you named there, some of them are, very big names that we hear a lot about. You don't think that the data center build outs are already built into them? You think there's still a lot of runway for these companies?
Oh yeah. The biggest question is there's a company that I featured about 2-3 months ago that's just been on a tear, and that's Bloom Energy. And Bloom provides what they look at is you build a new data center, and what if you could build a new data center but you don't impact the grid? So Bloom builds these hydrogen reactors that they claim that you give them an order, they claim they can deliver it within 90 days. So that your data center, you don't have to worry about getting all these permits for the energy. You produce your own energy. So, I'm looking at that whole data center thing and saying, okay, what does a data center need to be built? And let's look at the equipment companies and the engineering, the construction companies and all that are actually going to be building all those things.
It's very interesting that you brought up Bloom, because I was having a conversation this morning with a good friend of mine that we talk stocks all the time, and he brought up Bloom as one that he sure wished he got into, because it's had such a big run already. But it sounds like I need to take another look at it, because there might still be some more runway on that one too then.
What is a hydrogen reactor? Since hydrogen is usually something that comes from petroleum.
So, I really don't know, but okay. basically they use hydrogen to produce the turbine energy, but they're producing the energy right at the data center, not tying up the grid. And if you listen to any of these, I like to listen to some of these zoning things when they're putting in a data center. We've had a couple here. And that's, of course, what everybody talks about is, what about the grid? What's it going to do to my personal power bill?
Yeah.
And Southern Company says that in the next 5 years, that 20% of their increase in production is going to go to data centers. So data centers are going to be their biggest customers.
Yep. And right now we need to double the power grid just for us, for electric cars and everything else, and there's not enough power for all these AI data centers. So something's going to have to happen out of this, because it's we need like 4 times the amount of energy on Earth to run all these data centers. So something's going to have to come about with this. It's just
Because
too
Bloom
much.
I
sounds
was
more.
watching an interview today that a guy claimed that this one data center that they were putting in is going to be using as much power as the entire nation of the Netherlands.
I believe.
Wow.
And it's one building. I know.
The Netherlands is 15 million people, and it's going to use as much energy as the Netherlands presently uses today.
I know.
It's amazing. Dan, what are your thoughts about sectors for next year?
I mean, I don't really have a special sector. I just know I'm not going to be looking at the biggest companies. I'm going to be trying to focus on some small to mid-sized companies that have bigger growth prospects, good returns on capital. I'm going to be mining that space a little bit more because those areas have underperformed over the past several years, and I think that's where the performance is going to come from.
It
Let
sounds
me ask
very
you a
similar
question
to.
about
ahead, Jim.
that, and that is the one thing that I look at when I'm looking at smaller companies is where are they going to get their financing? Will they be able to borrow at favorable rate? They got to get either an infusion of capital from venture capitalists, or they got to go to the bank to borrow it. And so I look at that cash flow that most of these smaller companies they may be increasing in revenue, but they're not at a break-even point yet. So with the negative cash flow, they have to get capital infusion or go to the credit markets. And that's why I kind of like the bigger companies, because they've got access to both of those markets.
That's fair.
Interesting point. Listening to, again, Howard Lutnick this morning, it sounds like, the Trump administration wants to just provide more liquidity. So it might help out these small companies. And I've heard a lot of analysts talking about, and certainly we're starting to get a reversal of the trends of the Russell, which represents a lot of the smaller, mid-sized companies. So great points. I'm
Tony, would you
tending
go out
to.
and say that we might have a sovereign wealth fund here at the United States?
I missed the first part of the question, but it sounds like we're definitely starting a sovereign wealth fund.
Yeah, in other words, are we actually going to do that? And what are we going to use to fund our sovereign growth fund? Like Norway and Sweden and them, they use it for their offshore North Sea oil. We see what the Middle East is doing. They're using oil. Some areas are using rare earth, like Kazakhstan and all those stands out there that they're getting it. How are we going to fund our sovereign wealth fund?
President Trump keeps working out deals to take parts of companies or dollars off of sales. I forgot exactly how much he's taken off of the chips that NVIDIA and AMD are going to sell to China. But I mean, there's a number of streams of cash flows that he's starting to develop that I think are leading to that sovereign wealth fund. They bought into MP Mines. So there's every time I see him, there's a new deal for Boeing, where the government's going to be buying some new planes from Boeing. And every time I see a deal, I'm like just waiting for the other announcement of how much the government's going to take of this company, because that's the way it's been going. So
yeah, we're funding it with the debt. It's just added to that 38 trillion sitting out there.
Yeah, why not? At least we get something for our money, right?
Yeah, exactly.
Well, I was
We
just
could
going to
fund it
wrap
from
up
tariffs.
my thoughts on the sectors for next year, and that I'm a little bit leaning toward the way you are, Dan, and just thinking that I'm looking at more value. I'm not jumping out of some of the tech stocks I'm in, but I might be trimming back a little bit. But it's all about value to me, and I think there's some value still in some of the tech stocks, but I think there's an awful lot of companies that didn't do a whole lot this year. Actually, we're just starting in the last couple of weeks to see them move and change. I just mentioned Boeing. I think Boeing is one that next year I think we're going to see explode. And sometimes you see in January, right through December, a company doesn't do anything, and then all of a sudden in January, these companies that were left behind in one year, everybody starts jumping into them in January, and they take off to a fast start of the new year. So I think Boeing might be one of those companies. So those are the kind of things I'm looking at. And our last question of the day here: what would be your best stock pick today? If you're going to buy something today, maybe you did, what would be your best stock pick today?
I mean,
go ahead, Dan.
I'll go out. I got AXT is my pick. It's trading symbol AXTI. They're a worldwide materials science company that develops and produces high performance compounds and single element semiconductor substrates, namely the wafers. So all these other people that are making all the, the chips and that, and they're actually making what the chip goes on. They're making the wafers. So everybody needs their product, and they're the leading producer of it. So if we're going to have a revolution through AI, I think that's the company that's going to benefit the most.
And I'm sorry, Jim, that the ticker was AXT. Is that correct?
AXTI.
XTI. Gotcha. Okay. Great. Dan?
Yeah, I was looking at Cava. This is a Mediterranean fast casual restaurant, kind of the Chipotle of Mediterranean food, right? But similar to Chipotle, it takes about $2.5 million to build out a store and get it up and running. And then first year sales end up being around $700,000 a year. So quick paybacks on their invested capital. And, then they still are showing same store sales growth. So this is a company that's a long runway. It's down about 50% this year on valuation concerns. But it is that kind of company that's at that crossover point where the store expansion is covering the corporate overhead. And with that type of return on capital at the micro level, I think you end up seeing a pretty long runway of earnings. So that's the one I'm kind of looking at. And similar to, return on invested capital and looking at, some smaller companies that may have a longer runway of growth.
Interesting. I was watching that from the IPO, and that definitely took off and probably became a little overvalued. And
Exactly.
to your point, it's pulled back quite a bit here, but interesting concept. And
Yep.
Haven't had a chance to get into one yet. I don't know where the closest one to me is, but looking forward to trying it.
Nice.
Glenn, what are you thinking?
Well, in my normal vein of technology, I am going to suggest Western Digital. They've done amazing in the past year. I used to have them in my portfolio about 3 years ago, but after doing absolutely nothing for 10 years, I was like, I had enough of, opportunity costs. So I sold them about 2 or 3 years ago, but they spun off SanDisk in April of this year at about 20. SanDisk is over 240 right now. So I'm sure they have a piece of that. And I just, the rise in Western Digital has gone up like $140 in like the last 7 months, which is ridiculous. But I really think this is directly related to AI models. When you train a model, you create a copy of it. You have to store it somewhere. So as people are storing more and more of this data, you need more and more storage to put it somewhere, just like memory. And these data centers, like you said, whether it's wafers or it's the building itself, or it's the it's the hard drives that store all this stuff. It's all these what would you call them, ancillary companies that surround these guys that are making money too. So maybe the bigger guys aren't as growing as fast, but all the little guys are still getting orders for the products to fill up these data centers. So there's still a lot of headroom.
Good. Yeah, Western Digital, I used to hold that, and they definitely had run, and there's days I regret that I had let that go for a while. So that's all good picks. I'm going to give two at the end here because I already kind of mentioned one, which is Boeing. And they're both of my picks are in the transport area. It's totally different, though. I just think Boeing's a great value, and I think it's a big turnaround story that's going to produce and grow. And of course, it's a duopoly. So I think there's a lot of opportunity there. And my other is because of a recent pullback, Uber. Uber just really pulled back here. It kind of tends to trade between 80 and 100. And I think over the next year, we're going to see it break out through that 100 level. And right now, it's a good opportunity because it's pulled back to under 85. So I like them both. I think they're both good. But in general, again, I'm looking for value for next year, and I think both of them provide some value and opportunity. Uber's pulled back mostly because of reports, I believe, of Waymo and their growth and how popular that's become in some cities and their continued growth. But I think that Uber still has a lot of road ahead of it too. So,
Tony, I'm
Yep.
following up on just what you said. I'm looking at the trucking area of Uber. I think that's where the fantastic growth is going to be when autonomous trucking, and Uber has a subdivision called Uber Trucking. And I think
Yes.
that's really where their growth is going to be. Everybody's looking at the cars. I'm looking at the trucks.
Thanks for mentioning that, Jim. I've spoke about that before in the past when I brought up Uber, and they also have, of course, Uber Eats. But I love the idea because there's been times in the past that I've looked for shipping, and it's kind of a pain if you're a small guy that doesn't ship a lot and regularly. But Uber is going to be that kind of shipping on demand with their trucking for everybody. So I definitely, that's always been a big attraction to me. And I think they're getting a good share of that food delivery service too. And they're moving into autonomous as well. So thank you for adding that. Anybody have any other closing thoughts?
One thing with Uber and their transportation is they're going to have to compete against Amazon and their gigantic logistics operation they built on Earth. Like it's like they built so much capacity, they have to actually sell it to other people. You know, you have to have other storefronts. You have to sell the capacity. Otherwise, it's like the reason they built out their cloud is because they needed to handle, Black Friday. But now you don't need all that capacity all the time, and they have to, it's like their system is so powerful. You just go through their mechanism and you can ship anything. So they're gonna give DHL and UPS and FedEx a run for their money. Right.
Good point, Glenn. Good point. Well, I thank you, gentlemen. This was great tonight, and special thanks to Jim for joining us as a special guest tonight. For more investing information, please visit our website at marketocracy.io to learn more about our masters and model portfolios. And you can invest alongside of them. Visit marketocracymasters.com. Thank you, everybody, and we will sign off for tonight and look forward to our next podcast next month.